Hello, I'm Troy Harmon, Chief Investment Officer for Henssler Financial. I'm joined by Nick Antonucci and Jacob Keene, and this is your market update for October 2018 from Henssler Financial. We've got pretty good news coming out of September. The economy seems to be bouncing along pretty well. We had GDP growth at 4.1% in our last second quarter measure. Consumer sentiment seems good. Employment situation a little bit weak, but still really good. Unemployment ticked down to 3.7. Market's up 10%. What do we need to add to that?
Yeah, all the data has been pretty good. It's funny, we talk amongst ourselves about at the end of each week picking a good, a bad, and in between story. And lately, you struggle to find bad news. So,
sure.
As you mentioned, the economic picture does appear, pretty bright. But as you said, the employment situation kind of a mixed bag there.
Sure.
134,000 jobs added in September, shy of 185,000 that was expected, largely due to the effects of Hurricane Florence. So we expect that when the October report comes out, we'll see a lot of that reverse.
Yeah, and the big story there was the wage growth.
Absolutely,
we saw
2.75%.
Right, which is actually higher than inflation now.
Sure.
We've seen inflation come off a bit. We got up to 2.9 on CPI. We're back down to 2.7. I think the expectation moving forward is to get to 2.4 on the next.
Yeah, so real earnings growth, you're kind of seeing a pickup in that momentum.
And with inflation coming off, one thing I want to mention is if you look at the oil base effect, which year over year, middle of the year would have been 75% year over year change in oil.
Right.
Now we're coming back down to 50. So it's why we're seeing that headline CPI kind of come down when you see core CPI is still been
2.3 to 2.2. The drop in core versus headline is much smaller.
Right.
Interest rates. Let's talk about that a little bit. We had a steepening of the yield curve.
Well, we had a Fed hike,
right,
26th of September.
Yeah, we're pushing that level. I mean, a lot of this solid economic data has been pushing rates upward. We saw coming out of the meeting, if you look at 2019 expectations, the Fed has been talking 3 hikes all along. The market's starting to get to pricing that. I think we're at 1.5 if you look at kind of the market expectations. Now we're up above 2, so we still expect this kind of hawkish stance from Powell. He hasn't really blinked. And we're starting to push these levels that we haven't seen in a while.
Yeah, absolutely. And this was our 3rd hike of the year. We still expect probably one more in December. There's about a 77% chance that we get a hike in December, making the 4th one for 2018.
Yeah, so when we saw that bit of an increase, we also saw markets, the financial markets, equity markets, pull back just a little bit as well. We look now at September. In our rearview mirror, we had about a 58 basis point rise in asset prices according to the S&P 500.
Yep. And we've just closed the 3rd quarter. We're going to get 3rd quarter earnings rolling in the next few weeks.
Yeah, we'll get it toward the end of this month, the end of October. We'll start seeing it'll be in full swing for sure.
Yeah, that could drive market moves for sure. Hopefully, we'll stick with that 25% somewhere in there year-over-year growth in earnings.
Right. Yeah, and as I mentioned, year to date, S&P 500's up 10%. If you look at a little more granular, you look down at the sectors. Information technology still leading the pack, over 18% gain in 2018. We got healthcare and consumer discretionary, is that right?
Right.
That's still leading some of the others. Those 3 are the only sectors above the overall market average.
And I think it's worth noting we had kind of a shakeup in sectors.
Yeah,
very recently.
The reconstitution.
The telecommunications sector, as it historically was, basically was AT&T, Verizon, I think CenturyLink maybe.
CenturyLink.
It was like 3 components, and now we've got communication services, which has taken some of the discretionary names out, some tech names.
Right.
So now it consists of those 3 names I mentioned, but you also have Alphabet. Yeah. You have Disney, Netflix, Facebook.
Basically, advertising and media has been tossed in with the traditional telecommunications.
Right. Going forward, what we do expect, I mean, obviously, the consumer's healthy, as we've mentioned. If you look at where we are now, looking forward, the picture looks a little bit brighter over the last month with inflation pulling back. The yield curve steepening a bit. But I still would expect that we're seeing probably relatively close to highs in the S&P 500 at the moment. Sure. So that has been your market update from Henssler Financial for October 2018. We thank you for watching.